All right. Weekend's over. Back to work tonight, guys and gals. Monday evening, November 16th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time tonight, if you're here for the first time, it's great to have you with me, because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I've got a great video in store for you guys and gals tonight. Lots of setups we're tracking for Tuesday. Charts are all prepped up in the background, as you can see. Got the E-minis, got the oil, and we got the gold on our radar for tomorrow. Boy, where do I begin? We got vaccine news. We got OPEX this week, rollover this week, weekend gaps, breakout moves. I got so much to cover here tonight, so much to share with you guys, and a bunch of great setups we're tracking for Tuesday. Before we jump in, though, and get these setups ready for tomorrow, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. If you haven't done so already, make sure you hit that subscribe button below this video and grab that link, get subscribed. That way you never miss all the good stuff we publish every evening on this video. And don't forget, if you have any questions tonight, drop those questions in the comment section for me below. I'll get them answered as soon as we finish up with the video tonight. And as always, if you tune in every evening, if you're like me and you rely on this video to get your mind right and those charts right for tomorrow, hit that thumbs up button for me. Always appreciate you guys supporting our channel by tuning in every evening. Subscribe to the channel, drop those questions in the comment section below. And if you enjoy this video as much as I enjoy making it for you guys, appreciate you guys hitting that thumbs up video or that thumbs up on the video here tonight. But enough of the introduction. Time is ticking. Let's take a look at the charts and get ready for Tuesday's trading session. Now, of course, look at the charts here tonight. Lot to cover here in front of us. First of all, I've got the gold, right? Gold is basically a bull spike and range, but we had that big seesaw move in the pre-market on gold. So I'd like to be a buyer on gold right now. I'd like to be a buyer on a pullback on gold, but I got to be careful because we're right back inside that range from yesterday or from last week's trading session. We'll grab a couple setups on that for tomorrow. Looking for failures and breakouts. Over on crude oil. Crude looks like a flag, but it smells like it might be a reversal. There's one big clue on the oil that tells me it might be time to get short the black gold, the Texas tea, the crude futures. Got a big overshoot of a measured move on oil. I'm going to talk more about that here in the video tonight. I'm looking to get short on the oil. I'm looking for a short up on the oil in that battle zone overhead. We'll break that down into bite-sized pieces. And over on the S&P here tonight, we got a bull market into a trading range. It's basically a big expanding triangle right now. I got some resistance overhead, got some support below. Now it's very bullish, as you can see, but we're starting to run into some major resistance here overhead. I'd like to look for either a reversal off the high or a breakout through these highs. Got some easy targets waiting back at all-time highs there on the E-mini. So lots of great opportunities for some good trades for tomorrow. Expanding triangle on the S&P. Maybe it's a bull flag. Looks like a reversal ready to go on the oil. And again, a bull spike in range on the gold. We're going to break this down into all kinds of nice, easy to follow setups for Tuesday. Before we do that, though, let's make sure we grab a look at the schedule for tomorrow. Let's grab a look at the calendar for tomorrow. Tomorrow, of course, is a Tuesday trading session, 17th day of the month of November. Now, don't forget, this is the third week of the month. We got a busy week ahead of us, possibly one of the busiest, maybe of the rest of the year, dare I say. And the reason why I say that is because we get the last full week before Thanksgiving, right? Thanksgiving holiday next Thursday and Friday. So next week is a holiday shortened week, right? You've really only got Monday, Tuesday, and half of Wednesday next week. So if you're trying to make your numbers look good for the month of November, right, this is the week it's got to be done. On top of that, we're coming out of that kind of hangover week last week. The election was the first week of the month. Last week was kind of that wait and see week. This week now we're seeing vaccine updates. Everything's kind of coming back into swing here now. Not post-election. The election is still very much lingering out there, but we've kind of shaken off this hangover now, and people are starting to get back to reality here again as far as the market markets go. So that will definitely contribute to a little bit of this kind of thawing out of the markets that we saw last week. On top of that, we know third week of the month means what? It means volatility. OPEX is on Friday. Friday is OPEX, right? Known as triple witching, right? Quad witching won't be until next third week, the third week in December. So we get OPEX on Friday. Now, this shouldn't affect us too badly tomorrow, but as we go into Wednesday, Thursday, and of course Friday, we do expect options traders to be using hedges in the futures markets, right? And the equity markets, of course, and that will shake things up in the futures market. So we do expect there to be an increase in volatility, right, as we go through the rest of this week. Again, Wednesday, Thursday, Friday, expect to see increased volatility. So OPEX on Friday, we're probably going to be getting rollover on oil at some point tomorrow, Wednesday, Thursday. Usually rollover on oil is around the 18th of the month. You can pretty much set your clock by it. I always start looking for rollover as of the 15th of the month. So right now, if I go back quickly here to the market analyzer here, courtesy of NinjaTrader, you'll notice that if I zoom in on this, you'll notice that oil is still very, very close right now, right? We're currently on the 1220 contract with 337,000, right? And of course, the next front month is the 121 contract. It's nipping right on the heels of that December 2020 contract. So this may be tomorrow. It may not be till Wednesday. It's difficult to tell when we'll have rollover until we actually get the rollover. But be aware, once the 121 contract, once that total volume is higher than the 1220 contract, once the January 2020 contract has more total volume than that December 2020 contract, we'll then make the move over. So be aware of that. Rollover is upon us. And then probably, right, well, not probably, but we'll then look at rollover for the E-minis, the currencies, and the gold as we go into the month of December. But that, of course, is a little bit further down the line. So think about rollover on the oil, again, Tuesday or Wednesday. We'll keep you guys posted on that in the trade room, of course, as we know more information. We also know this week, there's a lot of kind of known unknowns here. We've got vaccine updates. We heard from Pfizer last week. We heard from Moderna today. Sounds pretty optimistic about these virus vaccines. There definitely is a healthy dose of skepticism about this stuff just because they are vaccines in such a short period of time. So I think everybody would be wise to be thinking about potentially some new information coming out here soon that may shake our confidence in these vaccines. Not that I'm hoping for that, but it does seem like the vaccines have gone a little bit too smoothly, dare I say. I hate to be the bearer of bad news on this, but these vaccines being rolled out so quickly, 95% effective rate, I wouldn't be surprised. I'm obviously hoping for the best, but I wouldn't be surprised if we see some holes punched right in these vaccines, and that could really shake things up here as we go through the rest of the week. And of course, it wouldn't be a newsletter without talking about the election. The election is still lingering. It's pretty clear at this point. It's probably going to find its way in the courts. And what we'll be looking for is new updates, right? What new evidence, what new updates? Is there anything, right, that starts to hit the news wires here this week? So election updates, vaccine updates, oil rollover Tuesday, Wednesday this week, and of course OPEX on Friday. Now, we haven't even talked about all the news coming out this week, right? Tons of news on the schedule. It's a third week of the month, historically one of the busiest news weeks of the month here. Mainly speaking, retail sales on Tuesday, jobs on Thursday. Those are probably the biggest news reports of the week here this week. There'll be no news on Friday because, of course, it's OPEX and you get housing starts on Wednesday. But I'll tell you right now, if you could only be at your desk for a couple hours this week, the retail sales number at 8:30, jobless claims at 8:30. Those are the big headline news or big market movers here of the week here this week. So tomorrow, retail sales at 8:30 Eastern time. We got some industrial production at 9:15 Eastern time. Those are two big news events. The retail sales number will certainly be the headline number here tomorrow morning. So don't forget, 8 o'clock Eastern time, we get together in our trade room. I'd love to have you with me with a front row seat for that news tomorrow. What I'll do is I'll put a link in the description of this YouTube video. I'll put a big button right over there tonight on the trading blog. If you're on YouTube right now, grab that link in the description. Get registered for tomorrow morning's trade room. We open up our trade room every morning at 8 a.m. Eastern time, Monday through Friday. We'll be here all week this week. Specifically tomorrow morning, though, have a front row seat ahead of that retail sales number. Grab that link, get registered for tomorrow morning's trading session, and don't miss a beat with us in the trade room. Let's keep going. We'll come back and we'll talk about more in tomorrow night's newsletter as we get closer to rollover and as we get closer to OPEX. All right, charts are all prepped up, as you can see. Gold's ready. Oil is ready. I get the S&P ready. Let's jump into the S&P first here. S&P, of course, getting a nice big blast higher here overnight from that update regarding the Moderna vaccine, right? This is kind of interesting, too, because we had that same spike up last Monday off the Pfizer vaccine. It seems like they're almost coordinated in that sense. Interesting, right? Interesting. We talked about that last week, too. Interesting how they're being released almost strategically right now. Right, keep that in the back of your mind as we go forward. What's the key takeaway right now on the S&P? The big key takeaway right now is it's basically a bull market into a trading range. And there are really three basic patterns I look for whenever I have a bull market into a trading range. You ready? Bull market tells me stick to the buy side. Trading range tells me there's two spots to look for your entries. Ready? The first one is I want to try to buy below the range. Okay, in a bull market into a trading range like this, I want to find a level of support below the range, and I want to combine that level of support with an entry pattern. My favorite entry pattern is called a two-try failure. What I'm looking for is a pullback. I want to see the moving average come over. I want to see bears come in, try to get short on that kind of breakout pullback right there. Get me in off support. Now, once those bears come in and commit to that breakout pullback, now we know exactly where their stops are. We know exactly where their pain points are, and we can simply buy right into those stop losses. Right? It's basically called a two-try failure pattern because you can see the bears try once and the bears try twice. It's basically a breakout pullback failure. Again, remember, it's a bull market. So focus on buying at support levels below the range with failure patterns. What's the second one? The second pattern is going to be a breakout pattern. Okay, this is the most reliable of the two breakout patterns. 1, 2, 3 breakout. I wait for a pop-up above the high. I wait for a pullback to the moving average, and I wait to see proof the buyers can jump off the moving average. If we can get that 1, 2, 3 breakout, then I can mark up my high. I can mark up the new channel low, and I can get aggressive buying that first test. As we always say, the first test is the best test of the low of that new channel. The third and final pattern is called a two-try breakout. This pattern requires a very strong breakout move. Now you'll notice I'm not trying to predict these breakouts. I will let the market break higher because remember, what are ranges? Ranges are balanced markets. That trading range acts as a magnet. So in order for me to feel confident being a buyer at new highs, I have to see some strength. I want to see a shallow pullback, a higher high in price, and I can get in off a trap low. We call these two-try breakouts, or in certain situations, they're called two-try trap patterns. So there you go. It's a bull market into a trading range on the S&P. I'm looking for seller failures at support levels below the range. I'm looking for 1, 2, 3 breakout patterns into pullbacks to the low of that channel, or strong spikes up with those two-try traps or two-try breakout pattern. Ready? Grab your screenshots. You can always pause the video, grab that screenshot, put that in your trading journal. We do a lot of work with journaling in our trade room. Now, back to our charts here now, and you can probably kind of see, right, what I'm talking about, right? Here's my trading range. I want to find levels of support below the range, right, and focus on failure patterns below. I want to go above that range now We've got a nice strong push higher here. Can they hold it and keep going? There's my 1, 2, 3 breakout into hidden channel pullback. Or do we keep on running shallow pullback, right? Higher high and trap low. You can kind of see where those patterns will all come together. Now, guys, don't forget, I'm just simply drawing on the screen right now. I have hundreds of examples of all of those patterns, failures and breakout patterns in my free trading class here at School of Trade. Everybody loves the free course we've got here. I'll put a link in the upper right-hand corner for you. Grab that link. You know, if you're serious about your trading success and you're not with me every morning yet in the trade room, you know, we do this together in our trade room. But if you're not, though, the next best thing is to grab that link up there, grab the free trading course. That way, when I say 1, 2, 3 breakout, when I say 2 try trap, when I say these pattern names, you'll know what I'm talking about. You'll know what the rules are, and you'll be able to really benefit from that by combining that free course along with this nightly newsletter. Now, that's the general idea behind this trading range. But there's a little more advanced tactics, though, that are going into this. For example, you'll notice right now I've got this trend line marked up, this trend line, right, marked down. Now, we had this big breakout higher, right? That big run up. That, of course, is the Moderna 95%, vaccine headline. It saves the day, saves the world, right? The markets love it. And the market, of course, right, pumps up and runs higher. The buyers, they want to get back up to retest those highs, right? That's their big target. They would love to get back up and retest those highs, but they've got this what I think to be a pretty clear level of resistance that is potentially standing in their way right now. And what I'm thinking about is could I get short off this? Could I sell off this high right now? I mean, let's face it, we already know what the breakout looks like, right? The breakout will come back. It'll pull back. The buyers, of course, will blast through new highs, right? We'll grab that high. We'll grab that low. We'll look for that buy off the low of that channel, right? We talked about that pattern already as we go higher. Or, right, maybe it continues going higher here, these highs, right? Shallow pullback, higher high, and there's that 2 try trap, right? So we have those patterns on our radar as we go here, as we're trying to go higher. But could I sell off this high? I think there's actually a really good chance we can get short off this high as well if we don't get that breakout pattern that we'd like to get, right? Because, I mean, think about it. All of that resistance overhead here, it's a very strong move higher. So how do I sell short when I've got a big push up like this? Because it's obviously a bull market. This is not a bear market, at least not yet. How could I sell short on this? I could easily sell short as long as I can get what I call a crown reversal. In a bull market, what I want to see is I want to see buyers try once. I want to see buyers try twice. And ideally, the ideal here is a trap above that high. Moving average comes over, nice strong red candle for the signal, right? We're selling above that trap high. This basically harnesses the 2 try rule, and we'll talk a little bit more about this on the oil, because oil is going to set up in something very similar on this as well. I'll tell you, it's a bull market right now, but I really like this short. I really like how this pattern is setting up because of the resistance area at the top of this trading range. Now, we may also see the market completely reverse, right? Well, what would a reversal look like? A reversal would look like a 1, strong move down, 2, a pullback to the moving average, and 3, a strong run lower. What do we call those again? We call those 1, 2, 3 reversals. Now, if I can get that reversal, where do you think these bears are trying to go? They're trying to go back down to fill that weekend gap. What is the weekend gap, by the way? The weekend gap is the closing price from Friday compared to Sunday night's open. Remember, the market closes on Friday at, usually for most markets, 5 p.m. Eastern time. They then reopen on Sunday, right, at 6 p.m. Eastern time. I know it seems kind of weird like that, right? But they close on Friday at 5 electronically. Remember, nothing's pit anymore, right? It's all electronic trading now. And they're closed, Friday all the way until open up on Sunday at 6 p.m. all times are Eastern time, right? So we open back up at 6 o'clock. That difference there, that gap is a magnet, right? And that magnet usually gets filled before the closing bell on Wednesday. right? We don't know when or how it'll get filled, but if the bears do take control, if we do get that 1, 2, 3 reversal, we know exactly to draw it, right? Mark off that low, mark off that high, and get short off the high of that channel. I like that trade too. I really do. I like it. If it rotates over like this, that momentum will be very, very strong. And so I do think you'll be able to get a short off the high, right, of that hidden channel there as we try to bury this thing to finish off that pendulum or finish off the triangle rotation and, of course, right, finish off that weekend gap. Now, one thing you want to be aware of is if the market runs back down in this trading range and then pokes its head lower. That's not going to be a reversal yet, is it? If the market runs back into that trading range and then pokes its head lower, what is the plan supposed to be below this range? The plan is we're supposed to be buying this with what? With a failure pattern. The problem is going to be the problem is the market's going to feel very bearish. It won't be a full reversal yet. A reversal will have to be pretty clean. 1, 2, 3 reversal. If we go back into the range though, right? If we go back into this range though, and we sit sideways here for a while, then we poke our head lower. Now they may go 1, 2, 3 run lower, right? And we're selling off the high of that channel. You know what I mean? They may end up giving us a 1, 2, 3 breakout or 1, 2, 3 reversal through that range there. That is definitely possible here for tomorrow. What I'm talking about though is what if we sink back into the range and we go sideways? Can I buy it down here? I mean, after all, we're at support below the range. I definitely can, but I can be careful though because momentum. Right? And what's the most reliable entry pattern? Well, first of all, I want to look for a failure because, like I mentioned earlier, your best bet is to wait for the price to go below, wait for bears to try to get short, and buy into those stop losses. So I'm looking for a failure pattern, but I'm worried about all of that momentum. So I think what I'll do is I'll wait for the bears to try twice. Let them try once. Let them try twice, right? Once I get those bears trying twice, I like to grab a trend line off that low, right? A trap off that low. That'd be great. That'd be a great buy setup there, going back up into that trading range. So a quick recap here. To be a buyer on this, either going to need to see a 1, 2, 3 break higher, mark up that high, mark up that low, buy the low of that channel. Where would our targets be again? Targets, of course, are going to be 36.68. That's that Pfizer high, not from this week, but from last week, right? Just literally 7 days ago. That's that new all-time high off that Pfizer announcement. This one, of course, was the Moderna announcement. The one thing you'll be careful about, though, is this high of day up here, right? So, for example, if I see a two-try breakout like this is definitely not the place for it. Right? So be aware of that. I'm looking for this entry, this 2-try breakout pattern at those highs. I want to see this thing continue going higher here, shallow pullback, higher high in price. Then we can start thinking about looking for traps, right, as we go higher. So those are the 2 breakout patterns as we go higher. Again, as we go lower here, I can look for a crown reversal, 1, 2, trap and go. Right? For the short, I like that short quite a bit. We can also look for that 1, 2, 3 rolling over, 1, 2, 3 off the moving average. Mark that low, mark that high, getting aggressive off the high of that channel. And again, don't forget, if we run back into that range here and poker heads lower, momentum will be a concern. I do want to buy at support below the range, but I'll have to use that nested failure pattern. 1 try, right? 2 try, and then buy into stop losses back up into that trading range. Should be an interesting session for tomorrow. I'll tell you, we're bullish right now. I think there's some great chances here, though, for some short setups coming off of these highs. And again, don't forget, you can see all the details of these pattern setups in that free trading class that I linked up there in the upper right-hand corner. And don't forget, guys, also, too, I'll put all the links you guys need in the description of this YouTube video, right? So will these buyers be able to keep this party going, or will we roll over, right, and bury this weekend gap here for tomorrow, right? That is something we're watching here on the E-mini. Looking good on the S&P. Let's keep this party going. How about some crude oil? Over on the oil, now very interesting chart here on the oil. There's a bunch of clues, right, that we have on this oil chart here tonight. It's a strong bull market, you can see, right? I think that's pretty easy to see, right? Strong bull move up. What is the kind of confusing part of this is it doesn't quite look like we have the strength of a 1, 2, 3 reversal. You know what I mean? We get the strong move down, we get the pullback, but it doesn't look like a reversal, right? If it was a reversal, it would have really jumped off that moving average and the channel would be a lot steeper. It would just be a lot more of an aggressive move down, right? This is not a technical reversal, right? It is barely hanging on. The buyers are, that is, barely hanging on by a thread. What I think is the biggest clue on this chart right now is this overshoot of that measured move. Now we saw one of these examples on the S&P this morning for the bears on that pullback mid-morning. You'll notice we've got one leg up, two legs up. That gives us now that measured move. Well, think about it this way. What are the buyers trying to get to? The buyers, they want to get back up to retest those highs, right? Strong move up. Buyers want to retest the highs. Just like on the S&P, the buyers want to retest those highs. But here's the problem. That measured move it's right there at 41.76. So in these situations, you have a scenario where the buyers do still technically have control, but they have very limited options right now. What are they going to do? Buy into this measured move? It doesn't seem like a lot of buyers are going to be convinced about that. So again, at first glance, it looks like a bull flag. It looks like a market that went up and starts chopping around, going sideways. But flag patterns, I'll tell you, flag patterns are very specific. Their flag patterns are very well behaved, almost too well behaved. They pull back very slowly, right? The way the thing pulls back, it's usually a very narrow channel. It's usually very well behaved. You know what I mean? Perfect rotation. This one, I just don't see that. This does not look like a bull flag. If it was, it'd be a lot narrower channel, right? And it would be looking like this. You know what I mean? That's what a flag looks like. This simply looks like the buyers are hanging on by a thread. We got that run up. The buyers sort of go back to retest the high. They stall out at the measured move. They go lower. And now the buyers are trying a second time. Now, we talk a lot about this two-try rule in our trade room. You know, basically when a bull market pulls back, the buyers will try once and twice, to retest those highs. If they can't get that high retested, most of the time, this market will reverse. So we may not have a full-blown reversal yet, but we are right there for potentially a nice short setup on this oil. Now, the most important thing right now is I got to find a level of resistance. I've marked up these lows. I brought it up to those highs, and I really like how that high lines up with these two swings. So that creates my kind of sell zone, right? My battle zone. This is where I think the buyers and sellers will go to battle over who has control. If I had it my way, I'd like to see us go up into this area and come crashing right back down. That's what I'd like to do here for tomorrow. You'll notice here we get the weekend gap. Again, the weekend gap, Friday's closing price over to Sunday's open. Not as big, not as dramatic as we saw on the E-mini, but nonetheless, though, you got that $40 big round number, weekend gap down there. That's where we assume these buyers are trying to go. So knowing that we have, again, most important takeaway, a bull market that overshoots the measured move, we come back and they reject it. That confirms right away that measured move is legit. Knowing that now, the buyers have apparently tried once. This looks like they're trying twice. If they can't succeed to retest the highs here, look out below, and we'll look for this crash back down to that $40 $40.12 for the weekend gap and $40 a barrel, right, for that big round number. So what's the best entry pattern here right now? What I'm hoping is we almost always see what's called a failure into a pullback combination, right? It's a very, very common combination setup. Basically a seller failure pattern, right, into a pullback pattern for the bulls. Okay, what I want to do is I want to see if that pullback pattern fails. We already have that failure there. I'm hoping we get the buyers to buy into it, and I can use basically a failed pullback pattern to sell short. So again, I'd like to see us go up into this resistance zone overhead, get up into that high of that channel. I would love to see us tag that measured move. Then as the buyers come in and try to buy that pullback now, right, it might look like this, right, where it goes up, buyers try to get long, we short into their stops. Same basic idea here. We know where that level of resistance is. Remember, you always want to sell at resistance, always want to buy at support. As the market goes up, we're running right into resistance here overhead. Yes, it's still a bull market, but again, lots of clues right now. Where there's smoke, there oftentimes is fire, and there's a lot of smoke billowing out of the gas tank here of this oil futures. So hopefully we get the buyers try to get in. We can look for a failure, right? Sell into buyer stop losses. And then, of course, the dagger in the heart is that pullback as it rolls over, right? Buyer failure pattern into a seller pullback pattern. Where's my target? Back down to retest that weekend gap. A lot of times what happens is you'll get that full rotation, as we call it, that full price action cycle where these big moves, right? You'll see basically a buyer failure pattern into a bear pullback pattern into a trap pattern. Right? Because as the market goes lower, you don't want to chase after it, right? So traps are always ripe for it. So think about those three patterns there, right? Buyer failure at resistance, bear pullback after they fail, into a bull trap on the way down to that weekend gap. And don't forget, guys, failure patterns, pullback patterns, trap patterns. I cover all these patterns in that free trading course. Grab that link in the upper right-hand corner or grab the links in the description of this YouTube video. Get registered. That way you can get into these patterns here with us, or at least get a deeper dive into them so you know what I'm talking about on this nightly newsletter. So a buyer failure. Now, what if the market rolls over? Right? What if we just roll over here? If the market rolls over, our job is pretty straightforward. I'm going to mark up that low. I'm going to mark up that high, and I'll look for a short off the high of that new hidden channel. Now, these are usually going to be pullback, failure into pullback combination. So if you were to zoom in that area right there, a lot of times that's the setup you're looking for. Right? So again, we're trying to sell off the top of that channel, and I'll use a buyer failure into a bear pullback combination again, right? That terminology might be over your head right now, but if you take the free trading course, right, you'll learn more about it on our website. So we've got that covered. One thing you do want to think about is if the bottom falls out of this, it may really run. And if it really runs hard here, don't be afraid to grab that to try trap, right? Strong move down, shallow pullback, lower low in price, trap high, right? Remember all this? Mark that low, mark that high. That would be a great entry, right? So again, think about as the market collapses here, strong move down, you know where they're trying to go. Shallow pullback, lower low in price, trap high. As I said earlier, I'm always trying to sell at resistance. I'm always trying to draw those hidden channels to combine the entry pattern off some level of resistance there. So that will be if the market drops and runs lower. So we've got ourselves pretty well covered for the sell side here right now. How do we buy this market? The biggest challenge we have is this area right overhead. There is a lot of resistance up here between the measured move at 76, the high of day at 42.09, and that big top at 42.20. Now, let's face it. If this vaccine is legit and they can put together some sort of airline stimulus package, right, this could light on fire, right? This market could easily start ripping here, especially with some good news, with some more vaccine updates. The next level higher here is 43.06, right? That is where we assume these buyers really want to get to. However, right now, they've got their work cut out for them, right? The bulls are running low on options here right now. So our biggest problem, I think, at this point is if we go higher, there still really isn't much we can do up here because you're running right into resistance. In fact, if we do make that run higher here, I'll probably tomorrow, depending on how strong that move higher is, I wouldn't be surprised if we see one of those crown reversals, right? One try for the bulls, two try for the bulls, draw that trend line off that high and short back down again, right? That is called a nested, right? A nested reversal, nested failure. It's the same idea here, right? One try for the buyers, two try for the buyers, find that resistance and short off the high. So if the market runs up here, right, I don't be afraid to look for that crown reversal. Buyers try once, buyers try twice, that trap high. That is a really nice looking short. Again, at major resistance. We're not taking these reversals just anywhere. At major resistance, or as the market runs higher here, retest those major highs. Buyers pull back once. They fail to keep going higher, pull back twice, trend line comes over, right? Again, same idea here. One try for the bulls, two try for the bulls, just as we're seeing here right now. So with a lot of opportunity here to get short on the oil. Now, if the buyers can hold that pullback, if they can jump up, if they can hold the pullback and jump off the moving average, well, yes, now we have the proof that we need. Remember, guys, it's not enough to just get a strong break higher. We see strong breaks higher all the time, especially in range-bound markets. The key is you got to hold that pullback. Once you get that jump off the moving average, right? That's why I said earlier, this is not exactly a good-looking reversal because you don't get that jump, right, off the moving average. That's the only problem I see right now with the short side. But again, with the overshoot of that measured move, it gives some compensating factors here. If I do get that one strong move up, two pull back, and three jump, now we know. Mark that high, mark that low, right? And buy the low of this hidden channel. Again, our target at this point now is up at that, basically 43, even 43.06 is that big catapult high. Now, there's one more possibility here, and that is if we can get stuck up here. Right? And again, this is basically because of the vaccine stuff coming out right now. If we were to go up and get stuck up here, right, in a range, and this will look like gold probably, right? Gold is a range right now, right? What do we do with the trading range? Again, let's say, for example, the market goes up, and maybe it's right here. It doesn't really matter where it is, right? But it's a bull market now into a trading range. We spend the overnight session going sideways. What's the plan now? At this point, if the buyers can stick at these highs, I can now look for those three patterns we talked about earlier. Those seller failure patterns, right? Literally buying into stop losses with seller failures below that range. What were the two breakouts? First one was, of course, right? First one was a 1, 2, 3 breakout, right? That 1, 2, 3 breakout going higher, mark the high, mark the low. First test is the best test, right? Remember that one? And the second one was what? That 2 try breakout. Strong move up, right? Shallow pullback, higher high in price, and that trap below that low. These are the bread and butter patterns, right? If we get pinned up at that measured move, and you would assume the market is thinking we're going to get more updates regarding vaccines, right? You would assume if it does that, the market's reacting to some new information we get overnight, or maybe, right? Or maybe this is not a reversal after all, and it sticks up right at those highs here. So we definitely will keep an eye on that trading range. There could be some other nuances here, but we'll cover that tomorrow morning in our trade room. Got a pretty good plan though of attack here on the oil. And again, we're going to go over this all together tomorrow morning in our trade room. Grab those links in the description of this YouTube video. Let's keep this party going here. We got the oil ready. S&P is ready. How about some gold? So gold, of course, is pumping and dumping all over the place right now based on vaccine headlines. What's the key takeaway on gold right now? The key takeaway is we came out of last week, if you recall, at that grind higher into a trading range. Right? Now, we already know when it comes to a trading range environment, those three patterns, right? Look for failures below it and breakouts above it. Well, you'll notice what happens, right? We get this big run lower here, right? This, of course, is the, good news is bad news for gold, right? So good news, right? The world's okay. Vaccines come into the rescue. bad news for gold, right? On paper, you would think that way, right? So gold is a bad news market. We see some good news come out of the overnight session, right? Some good news regarding vaccines. That's not good news for the gold. Now, what is very interesting about this, though, is you'll notice how they quickly rebounded right back higher here, right? As if to foreshadow this may not be the rosy picture that we all are being told right now. Obviously, I'm reading the chart right now, right? I'll keep my opinions out of it, but the chart right now, if the world was really a rosy place to be, something tells me gold would still be now down near its lows right now. So we get that big push lower, and look what happens. Big push lower, look what happens now. Bears try once, bears try twice, and they run back higher again. What do we call that? We call that a nested failure pattern. Now, why would you be looking for a nested failure? Because it's a range, right? And what do we do below ranges? We focus on failures, right? And this is obviously an extreme situation for that because you can see how strong that move down was. But remember, right, if you're trying to be a buyer and you get a real strong push down, let them try once, let them try twice, and let it rip, right? Buy right into those stop losses as the market turns around, draw that support trend line, buy at support. We've talked about these patterns quite a bit last week. First time we've talked about these for the most part. But think about the S&P, right? The S&P is a very similar example to this. If the S&P pulls back, right? If the S&P pulls back and goes running lower, what's the pattern you want to use? A nested, right? One try for the bears, two try for the bears, trend line comes up and buy from there, right? I want to buy below the range, but I got to be careful because of all that momentum. So as the market runs lower, bears try once, bears try twice, right? Wait for that signal off the trend line, buy into stops, go back up, use the range as a magnet. Use the range as a magnet. It's exactly what happened here, right, on the gold, right? That's a key takeaway, right? It's a strong move up into a trading range. Market gets rocked going lower, but of course, bears try once, bears try twice, and we're back up, right, in this trading range right now. Now, where does that leave us now? Well, the last place I want to be trading is inside the range, right? I don't want to trade inside the range. So now we have what is obviously a very bull market right now, or a very bull momentum. But here's one caveat. Well, two caveats, actually. First one is I don't want anything to do with trading inside the range. The range is where good trades go to die. You don't want to trade inside the range. So for me to want to trade this right now, and you guys are experts now on bull markets into ranges, what do? We look for buy setups using seller failures below this low, right? Or we look for breakout patterns. 1, 2, 3 breakout going higher, mark the high, mark the low, buy the first test. Or strong breakout, shallow pullback, higher high, trap low. So we now know kind of the general idea of how we want to trade this. Where do the buyers want to go? Well, if I take the amount of the move below the range and I project that move above the range, look where it puts us. Right around 1918.3. That's one big objective for the buyers. If we go higher from there, 1936. If we go higher from there, it's 1966. So all the way up the ladder here on the gold. Right now, though, the buyers have to get through these highs. If they can give us that 1, 2, 3 break higher, bingo. Mark up that high, mark up that low, buy the first test of that low. Look for those two breakout patterns, right, that we saw or we talked about here earlier. My next kind of caveat, the elephant in the room right now is this big move down. Okay, this one thing I'm concerned about. If the market makes a run lower, we may see these bears trying to retest those lows. Okay, it's very common for a strong move in one direction to try to go back and retest that low before we make that run back higher again. Okay, so if we pull back here right now, I'm going to be forced to use what we call a nested failure. That's called a 1 try, a 2 try, and buy up from there. So I'd like to use a failure pattern below the range, but the one, again, there's two caveats right now. One is the fact that we're inside the range. I want to buy below the range or buy above the range with a breakout pattern. The second big caveat is this big move lower? Wouldn't be difficult to convince the bears, try to run back down to retest that low if things get shaken up in the overnight. To avoid that problem, I'm going to wait for bears to try twice on the next deep pullback. And if I can get a nice signal off that, that should free up enough space, right? So I'm not buying too close to the range. It also takes care of momentum and allows me to buy into stops after sellers commit a second time. So on the pullback, I'm making a small adjustment. I want to see a failure pattern, but it'll be what I call a nested failure pattern. Again, why nested? Nested failures, as opposed to regular failures, are all based on momentum and market psychology. I cover all this in a lot of detail in that free trading class that I've talked about here many times already. And then what's a good short trade here for the sellers here on gold? Really, the only way to do it is going to be, we're going to have to get a 1, 2, 3 reversal, mark that low, mark that high, get short off that high. That is one very viable entry pattern. The challenge will be is making sure we get in before we get back to that 61.5. What is more likely for gold is to get a strong run down, a shallow pullback, a lower low in price, and a trap high. Be looking for those traps as the market goes lower. Look for that takeoff the downside, shallow pullback. And as always, right, I'm always trying to find additional levels of resistance by drawing new channels. But the most important thing, though, is if the market does take off the downside and I want to sell short, I want to do it before I get down to that low, and I want to focus on traps, because traps are the best entry patterns to avoid selling too low, right? So trap high, so we're not selling right into that low. Now remember, there's a big low down here on gold, then at 1848, right? Big juicy target for those bears, right? So bears would love to take this thing down to that 1848, but they have to get control of this market first. What I'd like to do is either get a breakout going higher or get that nice pullback with a nested 1, 2. That would be, I think, the best entry pattern we can look forward to here tomorrow on the gold. Or we may also see the 1, 2, 3 run higher here, right? Mark up that high, mark up that low. It's just a problem right now is just simply getting out of this area, right? We're too close for comfort in that trading range. Tomorrow should be a pretty good day here for gold buyers if they can get a pullback or get a breakout going higher. So there we have it. Get the plan ready for tomorrow. Gold is also to go here. Bull market into a trading range. 3 basic patterns there, right? Don't call it a bull flag on the oil. Looking to short the oil. And of course, over on the S&P, I would love to get a crown reversal on the S&P here in the pre-market tomorrow. Don't forget, guys, tomorrow morning, 8 o'clock Eastern time, we'll do this all together. The easiest way to learn and earn this strategy is to grab that link in the description of this YouTube video, get registered as a new member, and come out and join me every morning at the opening bell. We'll update our plan, update our charts, and we'll trade the stuff together. Now, don't be afraid, again, to call the toll-free phone number there. Don't be afraid to call the office. I'm always here. If you guys have any questions, I can help walk you through the process of getting registered on our website. You can also use live chat on the left, live support on the right. Either call the office or use the link in the description and get registered for tomorrow morning's trade. The most important thing, though, is have a great rest of your evening. Thank you so much for tuning in tonight. Lots of great opportunities we're watching for the rest of this week. Hope I will see you guys tomorrow morning in the trade room. If not, make sure you come back and see us tomorrow night on the next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.